Okay, traders. So today I'm showcasing the boxes. Okay, so the boxes are these purple squares that you see here. We are looking at a congestion of 40 ticks. Okay, when the market hits 40 ticks up and down in in an accumulation phase. Okay, so what happens? Why is this very important for you to know? Okay, because there's a lot of volume involved in those areas. Okay, so this is where the market accumulates, and then it breaks out. It breaks out. So if you work with in conjunction with the time and sales and all the other indicators that we sell, okay, so you can have better understanding of what the market is doing. So if you let them build up, you can not get into trouble. Okay, so if you see these bigger ones, these bigger boxes here, okay, this is heavy accumulation. You see this one over here, and then they broke to the upside. This is the morning. Okay, but it took almost it took an hour for these guys to break to the upside.
Brick setup, brick
Okay,
setup.
so you need to
Short
be aware
signal
of
and
this.
queue.
Okay, so sometimes you would like to say, well, I would like to trade the breakout of these boxes. Okay, but you cannot trade them alone. You need to use them with the time and sales, with everything that you need to have, because it alone they don't work. They just you need volume, you need correlation, you need time and sales to work with you, so that way you can make better trades.
Short signal and queue.
How I will use these boxes? I will use them for market exhaustion. Okay, and if you like to trade reversals, okay, and the best ones are when the market is congestion below, right at the ATR. This is where you really will see if the market is gonna break up or down. Okay, so that way these guys will never put you, there is no free lunch here in trading.
Short
It's
signal
very
and
very difficult. You really need to put a lot of effort. If you are trading, put a lot of effort and try to understand what the market is doing. If you see congestion box over here, for example, you see another one here, then you don't see momentum picking up here, then you see another one here. So you see the pattern. I don't know if you see the pattern. It's a triangle. You see what these algos look for. You see here. It's all over the place. Okay, so you need to be aware of all this information. These guys work in blocks. They work in blocks. So if you don't see a clear path, okay, don't trade. Okay, or if you see this type of pattern, you can enter with small lots. Okay, because these guys really will mess your life up. These guys are incredible. They work at high frequencies, especially the Nasdaq. Okay, so that's what the boxes are all about. Okay, so you need to be aware of this type of patterns, okay, that you see here, and work in conjunction with the time and sales and everything. And for example, you see on the ES, you see the first block here, then the second block here. So
brick
the
setup.
market is exhausting. You see over here, it's exhausting. Okay, so buyers trying to pick it up. So you need to put the pieces together here. Okay, so you need to use common sense, guys. Common sense. For example, you see this line here, this ATR. This is the second ATR. Okay, you see bottom fishing here exactly. Okay, here's the bottom fishing. Okay, What does common sense say? We are in an uptrend. Okay, so we are in an uptrend. I will let the box build, then I will check for clues, and add to the position. Okay, this is a great trade here. Okay, so when the market hits this ATR, okay, so there's traders waiting here. There's traders waiting here. And there you go. There's the second push. Then there's this one is
Long
profit
signal and
taking.
Q.
Okay, it's not like they're gonna reverse the market. It's profit taking. They hit the ATR. That's a measured move. They need to, they need to get out of the market. That's how it works. Well, today the market at the close is a little bit slow, so market is been going higher all day long. So not too much movement for me. I'm not gonna trade right now. So it's I already did some trades in the morning, very good trades. So that's it for me today. Just wanted to show you that the boxes, how they work. Okay, the Nasdaq is a little bit messy, but you can see the ES, for example. Okay, so you see over here they congested right at the ATR. This is where you need to wait. For example, if you try to trade breakouts, the ATR is a measured move. Okay, so what you're gonna expect here, you need to see the momentum of the tape. Okay, a visual imbalance here. Okay, so they already know that they need to break this ATR. So you wait for the pattern to occur. You see the market just pushed all the way without making any wicks. Okay, this is a profitable trade. And but they're congested here, here, here. See all this wick? If you got long here, look at this big wick, you wouldn't stopped out. So it's tough to trade these markets when they're already in the middle of nowhere. If you trade it in the middle of nowhere, it's very complicated because there's no reference. There is no reference. You see, that's why I either trade the breakouts because it's a measured move, and I know that it's a place where you can find traders. Okay, there's traders waiting for it. Okay, so that way you will not get involved in areas where there is nothing to trade. So you see here, the market is congesting here, congesting up here, and it's an exhaustion. It's an exhaustion. You cannot go long here. Okay, you need to wait for the market. Then the market broke with violence, as you can see, but it was making boxes all the way down, so it went very slow. Let's see the morning open. See that first box very big, then the second box, and then it went up. The congestion boxes are, let's say, they're like when the market stops. Okay, so it gives you a little time. It has a sound so you can hear when the box is built. Okay, so that way you can prepare for yourself and don't get into nasty areas. Okay, so you don't need to get all the trending. Okay, so you need to get a little bit of the market, but everything will be confirmed with the tape, with the participants. That's why the tape is invented, because you need to find where the participants are, if they are on the sidelines or they're not trading. Okay, so you need to have the visual imbalance too, because the visual imbalance is very important, because it will tell you intention. Okay, it's where more sellers than buyers are, or more buyers than sellers are, so that way you get a clue
Long signal and
of where
Q.
the market
Long
is
signal
trying
and
to
Q.
go. Okay, you see here, there is the box here, market stopped, then we see another visual imbalance to the upside. We see a high frequency trading triangle here. Okay, this is unusual activity. You see the Nasdaq make a box here, then when correlation dot up, okay, you can make a trade. You see the prints in the tape, blue. Okay, you go long here. There goes the market. Not like I like it, but there it goes. It's too whippy. It's very complicated to trade right now. Very difficult. It's easy to lose money right now. Okay, guys, I just wanted to tell you that about the boxes, that they really work very fine, and it's a great addition to your toolbox. And just wait for the market to, to make a box, and then you can, if you are new to trading, especially if you're new to trading, because the majority of people don't know where to trade. Okay, they get when the market is congesting and they get stopped out. They don't know how the accumulation works. What is the accumulation? When these guys are ranging, they are buying and selling in a range, and they're accumulating. It's like a whale, because they want to move the market up or down. Okay, so you need to wait first the box, then you need to see volume. Where's volume heading? Okay, you don't need to trade all day. You don't need to do that. You just wait for the market to stop. It's like a bus stop. Okay, you need to wait for the market to stop, then you can start looking for a trade. It's not difficult to make your salary, guys, in trading. It's not difficult. You can make your trading money. You can trade for other prop firms too. You don't need to put your money on the line. There's lots of trading funding companies that you can trade for a fraction of the money. You don't need to put $5,000 in the bank, or whatever. It's not the same. It's not the same trading your money versus trading a prop firm money.
Long signal and Q.
The ES is exhausting. Still buyers in control. Come on, and Q, squeeze, sneeze.
Brick setup.
There's the short in the ES. The ES is gonna follow.
Brick setup. Short signal yes.
Order submitted. Order filled.
Short signal yes. Short signal and
Target filled. Target filled. Target filled.